we focus on African ingenuity, which is what our DNA is. And we also like to project that when we invest in entrepreneurs.
We luckily had a chance to do our first and only fund-of-fund investment into Oui Capital when we launched our first fund.
投資家地球紀行
I actually did start my career doing credit risk in commercial banking. I had a first degree in business and accounting. I studied in Lagos, Redeemers University. And then early in my life, I think when I was about 20 years old, I started working in a well-known bank called Guaranty Trust Bank in commercial banking. And that was really my foray into basically finance. And how I describe finance in this thing is putting money to work and getting money back, right? And so after that, doing that for about 3 to 4 years, I moved to the US and got my MBA, specialized in finance and strategy at Hult Business School in Boston. After my MBA, I went to work for a consulting company called Forrester, which you might know. Short stint at Forrester. After that, moved to another company called Silicon Valley Bank, SVB. It rings a different bell nowadays, but early stage practice as SVB, as a relationship advisor in the early stage practice. Basically, working with early stage companies across the East Coast of the US. Boston, New York, Vermont, the whole DC upwards. And in 2017, I decided to move back home to Africa, right? And I keep saying it. We had a client then, a small company raising their seed round. The company's name was Flutterwave. And it was, I think, the awakening for me that Africa's age of venture is starting to come. And the thought came to me that who is better qualified or better positioned to be able to help the continent through this digital revolution than people who know Africa well, know global context well, and willing to work for the good of the continent. And so that was when I made the very strange and unique decision to pack my stuff and move back home. And so I moved back home in late 2017. I was head of investments and vice president at another firm called Ingressive Capital. We enjoyed some interesting deals then. One was the participation in the Paystack deal, which I think was one of the very few companies that opened up Africa and put us on the map. Not only were there brilliant entrepreneurs, but we could sell the companies. There was hope for exits. And so, as they say, the rest is history. Beginning of 2019, I got together with my now founding venture partner, Francesco, who we had gone to business school together. This was our second company together. We had one failed company under our belts and decided we wanted to do venture capital a little differently. We wanted to invest in entrepreneurs who couldn't get on the faces of TechCrunch, who didn't go to Stanford, who didn't match the regular patterns, but were building stuff for the African continent. And so that was the thesis on which Oui Capital was built. And it was at a time where a wave was coming. We imagined that it will have that same revolution that we had in Southeast Asia. It was Africa's time. Everything was aligning, right? Mobile penetration, smartphone penetration, dropping costs of data, and just the world was opening up to Africa as the last frontier of development. And so we decided to be a part of the story, right? And really help entrepreneurs to help the continent. And so we put together Oui Capital at the beginning of 2019. I think this is our 5th year. It still feels like yesterday of running Oui Capital. So that's a lot of my background: finance, tech, entrepreneurship.
How is the difficulty is to conduct investment activities in Nigeria?
As you know, investing, there's the investing part of investing, and there's the structural part of investing, right? Like earlier when you met the team, you realize in a venture capital fund, to make a successful venture capital fund, not everyone is investing, but they all work together. We all work together to ensure that investing actually brings out the right results. And so I would say where we struggle the most is on the structural part of investing, right? Infrastructure, and when we talk about infrastructure now, we're not talking about roads and bridges. We're talking about mechanisms where you can easily bring in money, legal structures to preserve that money, and legal structures to get the money back out within all the technicalities of risk in between. And so the ease of doing business ordinarily, which is structural, is of course a difficulty anywhere else in the world. But I think we have a slightly more challenging environment here. One of the many things is that money comes in foreign currency, right? And so as a fund manager here, you're not just a fund manager, you're also a risk manager, right? So now you're thinking of all different strategies and techniques to mitigate FX and just sovereign risk, right? And also that flows into your portfolio construction. How do I construct my portfolio in a way where the risk is managed, right? Either you use different geographies, different currencies, what stage, and just what's the size of my portfolio? How widely diversified, how widely concentrated? So that's one extra challenge that we have that most of our colleagues around the world don't have. And I think it builds more skill, right? So that's one challenge. The other thing is also that the legal framework or the regulatory framework in a lot of the parts of Africa, not just Nigeria, we're not really or necessarily built for technology startups as we know it, right? If you look at the Jobs Act in the US, you would know that this was built to create an environment, a structure for how startups get funded, how investor and startup relationships happen, and how investors get their return, who can invest, who cannot invest. We have what we call CAMA here, right? The Companies and Allied Matters Act. From the name, you already know that it probably wasn't created for small companies, but we've made a lot of progress, especially in Nigeria. Now we have the Startup Act, which took a lot of our input, and regulation is building around that. It's making it easier. We're not there yet, but that's making it easier. And I think one part of our development as an ecosystem is soon when we start to see things like enforcement and litigations. It's going to really strengthen it, see what we have in terms of legal framework. But those two are structurally significant problems that we have to navigate through. And then the rest of the things is on the business side. Access to talent, access to institutional funding. I was looking at some data about a year ago when I was speaking to one of the pension funds in Africa, is that we actually have, on aggregate, more money in our ecosystem, in our venture ecosystem and PE ecosystem from US fund managers like private, endowments and insurance companies than we have from even Africa, right? That's beginning to change. You're seeing some of them starting to participate as LPs in some funds. So that's improving. But on the business side, that still needs to improve. And eventually, I think the bigger one is also just the fact that, unlike many other countries, the way our income is distributed in Nigeria and Africa is a little skewed, right? The GDP does not really represent the per capita income or consumer power that you have like a lot of places. And so that means that the products who suffer from a business risk, just a consumption or a demand risk, are a lot more. And just one thing you have to look at as an investor, some products are great products, but will just not have the critical mass to make it the company a success in Africa. And that's another thing you have to take into consideration. So I guess that's macro. Luckily for Africa now, or Nigeria, we have a lot of political stability, and so it's a foundation for growth.
Some of this overlaps with what you said, Jess. What is the key point for investment decision?
I think it differs fund by fund, but I'll tell you a little bit about our DNA here. I already touched on some. We bet hugely on entrepreneurial talent, right? We hardly lean on patterns. Like if you went to Harvard or you dropped out of your PhD at Stanford, we don't care about that. We focus on African ingenuity, which is what our DNA is. And we also like to project that when we invest in entrepreneurs. So that's very key. One thing we don't look at. What we do look at, and which is different from a lot of investors around the world because our situations are very different, is we go even beyond the founders. Very important, but we go beyond the founders as entrepreneurs ourselves, put ourselves in the shoes of the market and say, are these products, even though they're great, remember, can this be a success here? Or do we either need to redirect the entrepreneurs to put their energy where they can get the most from their energies, right? And so that's another thing. We really look at the market. How big is this market here, right? And because we're venture investors, expectations of LPs skew the kind of opportunities we look at. They're great companies, great ideas, great endeavors in Africa that are not just for us, right? Just because of the way venture is structured, right? And so we lean a lot into market and market dynamics. We feel that we are in a vantage position to see this better than entrepreneurs, because this is what we look at for a living. And so we go beyond the entrepreneurs first and say, is this market ready for this product? And then when we finish that, then we come back to the entrepreneurs or the team. When that has checked out, we then come back and say, is this the team to deliver on this promise? Right? So we kind of do it back to front. And I understand that talent is the most important thing in the entrepreneurial universe, but we go one step ahead first to figure out, is this brilliant entrepreneur, no matter how brilliant they might be, are they solving the right problem for the right market? And can this bring the kind of venture skill impact that we're looking for? If the answer is no, then the team is not going to matter much, right? And so that's one major thing about how we look at opportunities. Of course, there's a lot of venture capital information out there telling you, look at the team, market, the traction, the growth, all that good stuff. It's still there. But as we said, we look at the market and the team independently, and then we try to merge it together and say, this can work, but is this the right team to make it work? I think that's one different thing that we do.
How do you think the startup ecosystem in Nigeria and the current management has changed between then and now?
Very, 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 very interesting. I think we've passed through a lot of maturity. So back in those years, you had to be both coach and investor to a large extent. I'm sure most investors don't mind, but entrepreneurial education on just how startups are built, how they raise money, investor expectations, investor relations, exit planning has really improved, right? We have a lot of gratitude to be owed to a lot of accelerators, the YCs, the Techstars, 500 startups, some local accelerators, incubators, Ventures Park, CC Hub. They all worked together to bring this entrepreneurial awareness, right? So now when a founder comes out, they understand what they're looking for in terms of traction. They understand what their North Star metric should be. They understand how to manage their liquidity, their burn, their runway. They understand when to quickly switch up their team, when to make a pivot, a lot of those things. And so we are able to play our role more as investors and supporters, right? So that's really improved. Also, as I told you on the regulatory framework, running a startup is no longer an alien concept, either to players in the private space or even to government, right? We are now an opinion block, even to our government. And so that has really improved in maturing our ecosystem. And also just from the numbers, before you saw that the global decline in venture capital funding, these facts were reflecting in how much money we were attracting as an ecosystem. So that's really helped. We have just a lot more founders who know what it means to be startup founders and who know how to go about it, at least in the beginning. So that's really improved. Talent-wise, also improved. We've had a lot of people of African descent, just like me, move back and build in Africa. I think it's very important. If you look at the growth of every innovation ecosystem around the world, you've had a wave of people moving back home to build businesses, people who have learned how things work around the world and have come back home to kind of channel that energy and knowledge and talent into their local ecosystem. So that's also really helped. And also COVID helped because it opened up the world on a very major scale. And so talent and knowledge can move freely. So we have that. The flip side of this is now that as Africans, we're competing for global talent at a global price. So I guess this is the next problem that has come out of a good development. But I'm sure we always solve problems, so we'll solve this one too.
How do you feel and think about the presence of Africa ventures in African countries?
One word is very positive. And the reason being is that when an ecosystem starts to evolve, you not just need local players. There would be a few believers and supporters of that ecosystem from the get-go or from a developmental stage. And Kepple came in at a time where it was still a vision. What we had in the last 5 years wasn't quite mapped out. And not just did they come in and play, they supported a lot of local companies, right? They had a wide portfolio and also supported a bunch of funds, us inclusive, right? And that has a ripple effect on the ecosystem, right? And I'm sure that ecosystem has also paid them back to some extent. And so I think it's been very visionary for them. A major difference you see between how the Japanese ecosystem and the African or Nigerian ecosystem is that it's a lot more difficult for startups to break through and compete with big companies in countries like Japan, right? They're not those small spaces where a startup can just sprout. And I think Kepple was able to quickly see the difference in those ecosystems and be able to position and align with the African ecosystem, not just in Nigeria, in Kenya, DRC, around the continent. And so that has been very helpful. And I think it's also just brought a lot of attention and collaboration between the broader Japanese ecosystem and Africa. And then you started to see even more Japanese funds, right? So basically playing the role of a first mover to open up the pool. And I think the relationship is very symbiotic now. And yeah, it's just been very positive all around.
do you think and feel about Oui Capital,
Yeah,
this country, and Africa?
sure. So first of all, I really respect Olu in the way he inspires other investors and all other stakeholders in the ecosystem. I think the way he finds opportunities in the market is so unique. I think he's one of the VC investors who started to think out of the box and try to differentiate from the conventional investors in the ecosystem early enough back in like 2018. And funny enough, I met Olu in Boston when I was still at HBS as a student. And I reached out to him. There was Africa Business Conference, and he gave me like 5 minutes. And I was so inspired because I was also working on my plan to start a VC fund. And Olu became like my role model, mentor, also as well as my good friend. And I think the biggest headache for me as a new investor into Nigeria was like how to access great deals and also how to build a rapport with the other investors and also the founders here. Being a good friend with Olu just gave me access to different people, different opportunities, and I'm sure I learned a lot from Olu. It was also good, like maybe we belong to almost like the same generation, and with our background of maybe working outside Africa, maybe we share some kind of like similar risk and return perspective, and we know what it means to invest in African startups. So I think he has been setting a standard and also maybe kind of how we should look at the opportunities here. So he has been my great benchmark, and I think he had seen how I have been learning from the ecosystem, how I grew investment, and it's really encouraging to have a person like Olu next to me. And whenever I need some advice, I reach out to him. And that's why like I really want to keep working with Oui Capital. And you know, we are very complementary to each other. So like as we can bring more Japanese strategic investors from Japan, we actually have access to maybe more local investors and also investors from Silicon Valley. And once we combine our network and resources, actually we can add more values to our common overlapping portfolio companies. And I think that's the great showcase of how local investors and Japanese international investors can work together to develop the ecosystem, as also Olu emphasized in his interview.
Each other's impressions before when you met first and
Tough question.
So I'll tell you, when you meet Satoshi, you have an impression that he doesn't speak much, right? Like, of course, most Japanese people. So initially, you underestimate his sense of humor and his ability to stand up for himself.
I was nervous when I met you for the first time. That's why.
Right? Or to decide on what he wants. He never says no, but he does what he's going to do. Right? And so I think initially I wasn't sure because he didn't speak much. But as we started to look at deals together, then it hits you, this person has a thesis, right? They have their style. They don't have to put a loudspeaker in their mouth and say it all the time. But they have a style, they have a strategy that's well thought out, and they go through with it. And that's why whenever he says, look at this deal, I have to stop and look at it. because there's a method behind it. I think that was the first thing that changed over time. And the other thing is that, as you could tell here, when he was talking about whatever he was talking about, you would know that he has a sense of humor, right? Which not everyone sees, right? But is there. And so I think those two things it was a very fun discovery. And also, he's a lot more resilient and rugged than he looks, right? DRC, Nigeria, he just loves where there's trouble, right? As you said, he loves being in those aggressive places. And so that's kind of fun. I think he might be more aggressive than me. So yeah, that's interesting. And that helps because then you are able to find the best opportunities when you're not afraid to go into places and just be broken by the culture and be built back by it, right? So I think he's a lot more resilient than he looks.
So Olu looks like, he's so socially active. If you check his, Instagram, I never know what he's doing. Actually, he's so serious. He's concentrated on what he's doing. And, I've also seen how Oui Capital has been evolving in the past 5 years. And it's so amazing. He, tries to build a team and delegate what he has been doing to the team. And now team is growing so organically. And this is the biggest surprise whenever I come to this office, how the team is developing, great talents are coming. Of course, I know how Oui Capital can be attractive to new people who wants to get into this space. And he really built efficient and effective infrastructure to let the team will more or less automatically process the back office work of VC. And I think that's why he and his team can really focus on identifying the greatest opportunities, greatest founders. So, because usually VC has a lot of work and administrative work. And I think Oui Capital is one of the most successful Nigerian VC fund really built this system and having this efficient but also very strong team. And I think that's also where I am learning from Olu. And that's where he is actually very different from how he looks like. But it's also true, you find Olu everywhere where parties taking place.
I want to know also your vision about medium to long term, about collaboration with the companies.
Okay. So we already have very good collaboration. We have some portfolio overlap, and we look at a bunch of things together. And just going forward, right? And I'll tell you where our personal or individual objectives then align, right? Mostly in the last 4 years, we've invested in similar stages. Kepple has evolved over the last 2 years to doing slightly later stage than we do, which has created a strong opportunity that we could do the same deals and we could have a pipeline that goes from us to them, right? And so that's one big area where companies can benefit from having us in the rounds and having Kepple in the subsequent rounds. Also, we both have a knack for investing in Nigeria, but also outside Nigeria. And Kepple has been building a strong network to capture opportunities outside Nigeria. As you know, they have a strong portfolio and team around Kenya, which covers East Africa, basically. So that's huge, right? We now share a bunch of network between ourselves in Nigeria and Japan. As I was saying, I will be in Japan next year. We were supposed to do this in 2019, but then COVID struck, right? And so I think we would fix that next year. So just in terms of collaboration, we can look at a lot more deals together. We can pass on a lot more deals. And I think the dream for really Oui Capital is to be able to consistently deliver the highest level of returns. It's easy to get carried away in venture capital, to think that this business is about being cool and being on panels and being popular. It's a money management business eventually. Money comes in and more money should go out, right? And so we're very keen on collaborating on those things to increase value for both our African and our Japanese style investors. So that I think those are very huge areas of collaboration over probably the next 5 years. So I would say the short answer is Africa is open for business. And we are very similar in a lot of ways in how we approach risk, but the continent is full with a lot of opportunities, right? And so what happens is this is not just a safe, a profitable place to invest and collaborate. And invest is in the sense that, yes, we can drive returns for investors. But also collaboration means there are a lot of companies that can collaborate and open up markets for each other, right? Which, of course, Kepple has been in the forefront of that, helping corporate VCs to see opportunities in Africa. That's going to continue over the next few years. And I think it's a huge opportunity area. So as I said, Africa is open for business, profitable collaborations.
Yeah, actually, we are so aligned. So Olu covered everything, but I think we luckily had a chance to do our first and only fund of fund investment into Oui Capital when we launched our first fund. And I think that was the great starting point to think about what collaboration we can do together. And we are here now. And we are seeing the same future, how we can actually amplify our collaboration and build the better ecosystem here by, bringing different networks, different skill sets, exposure to different LP base actually, which is the source of strategic value addition to our portfolio companies. And yeah, I look forward to having Olu in Japan. And maybe in relation to what Olu said to the Japanese audience, I think usually Japanese companies, Japanese people have this mindset of trying to do everything in-house. And we owe to that because we also onboarded Japanese LPs as a Japanese VC. But now we are becoming more and more non-Japanese VC actually. We have non-Japanese partners. Most of our team members are actually non-Japanese. And we are running our current fund in a joint venture with Nigerian PE fund, which I believe has helped the Japanese companies to learn that not just Japanese VCs are best opportunities for them to consider investment. We ourselves are becoming more and more non-Japanese. And we have other VCs that are doing great things like Oui Capital. So I think we have a chance to really reach out to these potential Japanese companies to diversify their local partnership strategy in Africa and help them to do their business in a successful way in Africa through partnership with the startups. So hopefully, like, we can play a role of gateway to bring all these Japanese resources, Japanese companies, Japanese partners to the local players, such as Oui Capital. And I think that's where we also find lots of synergies of the collaboration between us.
Sure.
Yeah.
Question from me is
I think I'm fine. It was good to hear from Olu about like what he's thinking about us, and like it's also good to share our thoughts about Oui Capital. So thanks for the opportunity.
Yeah, that's interesting.
Yeah.
Thank you very much.
Okay, thank you.
Thank you.